You're watching Silver News Daily. Subscribe for more.
Imagine a metal so undervalued that its demand is skyrocketing, and its price could shatter records in just months. Silver, often overshadowed by gold, is now in the spotlight. And Lobo Tiggre, the expert in precious metals, says this could be the opportunity of a lifetime. What's driving this surge, and could silver really hit a new all-time high soon? Stay tuned, because you won't want to miss this explosive breakdown.
Like a Johnny come lately, oh, silver's up, so Lobo turns bullish. But it's not silver hitting a 12-year high that's got me bullish. It's silver acting resoundingly as a monetary metal should. Not like copper, not like oil, tracking gold, and doing so with more gusto lately than it has, not just in recent years, but even this year. This year, it has been tracking gold more closely than copper. That may not sound terribly stunning to your audience or mine, but last year it was tracking copper more closely than gold. So to see it acting as a monetary metal should, and seeing it do so even more enthusiastically, let's say, recently, yeah, that matters to me. That is new data. That is a change in the marketplace that I'm responding to. But I should clarify that the Darth Silver thesis was never a bear case against silver. It was primarily about whether or not silver goes back into circulation, assuming gold does. And so, and the quick answer to that is, in a modern world with digital transference, I don't think people are going to go around with medieval coin purses full of gold and silver coins, on their belts, unless we're in a Mad Max type scenario. But assuming civilization doesn't collapse, I think gold gets transferred, goes into circulation as money should again, but transferred electronically. And in that case, you don't need silver or copper to make change. So anyway, but never mind. Yes, I am actually more bullish than I have been for quite some time, maybe ever. Ever is a long time. I was pretty bullish in 1979. But yes, it's acting as it should, and it's very encouraging to see it, wake up. We'll see how this latest breakout lasts. If it's just a short-term short squeeze, like this latest little hockey stick, that may not last. But even if it goes back to sort of just tracking gold the way it should, then that's very, very bullish. Now, I have to say, sorry, and I won't go on forever, but on this subject, I have to say that the jury's still out on how silver will react if I'm right, assuming the hard landing scenario becomes undeniable. If, the brown stuff hits the fan, the next non-farm payrolls, instead of being another blowout jobs report, is really disappointing, and people start talking hard landing again, then it'll be interesting to see how silver holds up. If that does not wax silver and it keeps going up with gold, that'll be very good. Then that will be close to an all clear signal for me. Don't worry about the industrial side. Treat it like gold. And if you're bullish on both, and just go for it. But right now, I think that is an open question. I am very bullish, but near term, I'm still skittish about what happens if the economy surprises to the downside.
Lobo Tiggre isn't just any voice in the metals market. He's someone who's built a reputation for accurately reading shifts in precious metals and commodities. As the author and publisher of The Independent Speculator, Tiggre has guided countless investors toward substantial gains by identifying overlooked opportunities. With his deep understanding of both market fundamentals and real-world conditions in the metals industry, Tiggre's insights have become essential for anyone looking to navigate the complex landscape of precious metals. And now he's zeroed in on silver. Tiggre sees a perfect storm brewing in the silver market. Industrial demand is at record highs, supply is tightening, and silver's historic role as a monetary metal is re-emerging just as global economic conditions become more uncertain. But what does all this mean for investors right now? Today, we'll dive into his analysis, which could change how you think about silver's potential.
I'm falling and I can't get up thing for quite a while. So, the industrial aspect is a concern there. If that's what the viewer means, then yes, I think that's a concern, not long-term concern, but that concern equals opportunity too, if you have cash to take advantage of that, should the market make that mistake again. I may not. We may get a V-shaped thing. I'm not going to sell silver in anticipation of a possible crash because it may not. The Fed has trained investors that bad news is good news. So the kinds of things that should create a market crash could actually send it to new all-time highs. We're through the looking glass on this. So that's an important takeaway. Do not assume that bad news necessarily means that the market will crash. It might, but it might not. As far as silver's purchasing power, very briefly, there's an article called "In Defense of Hard Money" on our website. It's a free article, and it's a true story about my own experience as a kid buying, silver. One of the things I did in Mexico as a kid in Mexico is I bought old silver pesos, which were, I think, mostly tin or something. They're very light. They were crappy coins, but they had some smidgen of silver in them. And in the year 1999, I was in Mexico and I had a personal meltdown, and I had to sell what rainy day fund is for. I had to sell some of my old silver to literally feed my family. And I was in Mexico at the time, and I took the coins to a pawn shop, and they gave me 1 peso for them. And think about that. This was like 40 years later, with I don't know how many times 2, 3, 4 zeros had been chopped off the peso. If I had had nominal pesos, that would have been, I would have had like 0.0001 pesos. But they gave me 1 peso for each one of my 1 peso silver coins, which were mostly crap with a smidgen of silver in them. So in terms of, collapse or something like that, this is why we buy junk silver. It has purchasing power in case of need. And, I can tell you, I personally experienced the staying power of real money, gold and silver.
In 2023, global demand for silver has reached unprecedented levels, and it's not by chance. According to the Silver Institute, industrial demand alone has surged to an all-time high, projected to hit 632 million ounces by year's end. This 8% increase is driven by the rapidly growing need for silver in cutting-edge industries, including solar panels, 5G networks, consumer electronics, and electric vehicles. Each of these sectors relies heavily on silver's unique properties, from its superior conductivity in solar cells to its vital role in the expanding tech and energy infrastructure. Tiggre highlights that silver isn't currently priced to reflect this booming demand. This mismatch between demand and market valuation is one of the most compelling signs of silver's untapped potential, he explains. While the world clamors for more silver in everything from energy grids to personal electronics, the price of this precious metal remains surprisingly low, setting the stage for a potential price surge. Could this accelerating demand be the catalyst that sends silver soaring to new heights?
And that is $3,000 gold is, a target for the next few months, whereas the U.S. debt is a perspective for the decades. I mean, I remember as a lawnmower kid back in the 1970s saving my money in silver Morgan dollars back in the day. People were talking about the national debt, and it was this big emergency, the national debt. It was part of the thesis for why people were buying gold and silver, not just the inflation. The national debt was a big scare. Okay, that was more than 50 years ago, and the national debt has still to blow up in people's faces. And you could say, looking at what's happened to the dollar since then and what's happened to gold, that it has blown up. But as an investment thesis, as a decision maker for what stock am I going to buy today, the national debt is just not a variable for me. It's a constant. It's a constant worry, not a variable worry. So yeah, I get it, but this is one of those things where, to quote our good friend Rick Rule, you never want to confuse with the inevitable with the imminent.
That's definitely true. And I think we can maybe get a bit confused between the two, because if something is inevitable, then, in our minds, it sounds like, of course it's going to happen. But as you mentioned, it's not like it's going to happen right now and they can kick the can down the road. We do have a few other questions. I did want to also get to uranium here. But one of the questions has to do with the purchasing power of metal. And you mentioned how gold and silver bullion you should see as savings, first and foremost. So, the viewer says, I'm not concerned about the price of silver, but they are concerned about the purchasing power of silver in a collapse scenario. Your perspective on that?
Well, it depends on what you mean by collapse scenario. If we're talking market crash, sure, everything gets whacked. That's a buying opportunity for people who get it. It's very short-lived. And I must say, in the last market crash in 2020, gold came screaming back in a big V shape, and silver fell off a cliff, and then did the.
While silver demand is reaching record highs, supply is struggling to keep up, and this could be a game changer. Global mined silver production is expected to fall by around 2% this year, a decline that's largely due to decreasing output from major mining countries like Mexico and Peru. Mexico, historically the world's top silver producer, has seen its silver output plummet by 25% over the past 2 years alone. This supply shortage is creating a widening gap between the available silver and what's needed to meet surging demand. According to Tiggre, this limited supply amplifies silver's value, especially since demand is showing no signs of slowing down. With silver's industrial uses expanding and the supply diminishing, the scarcity could put significant upward pressure on prices. In other words, as supply tightens, silver's appeal grows, and Tiggre suggests that this demand-supply imbalance might push silver to levels the market hasn't seen in over a decade. Are we witnessing the beginnings of a silver squeeze that will transform its market value?
Let's separate the metals themselves from the stocks, because bullion, it's not a speculation in my view. It's not even an investment. Gold is money, as JP Morgan famously said. Everything else is credit. It's my rainy day fund. It's my insurance, my savings, whatever you want to say. Actually, no, I generally think of it as my savings. When I have long-term savings, I don't even have a savings account. When I have money I want to sock away for long-term, I buy bullion. And at that, with that in mind, I don't care what the exchange rate is with the dollar. If I want to have more gold than dollars and save in that way, then I just buy. Now, obviously, I'm not going to do that on a day where gold's going like that. You buy the dips. But I'm not worried about 2,700 looking expensive or something like that, because it's not what it's about. It's about savings. And if you look at the very long-term chart, I like to say, X marks the spot. If you look at the 50-year chart, or since 1971, when the dollar became a floating abstraction instead of having any tie to reality, the value of the dollar has gone down and the value of gold has gone up. It's a bit of a curvy X, but it's absolutely an X. And in many ways, that's all you really need to know about gold and silver. Basically, it tells you what we all really know to be true about fiat currencies. Now, the stocks are another matter. If I'm trying to speculate to make money, it's a different question. And clearly, when something hits a nominal all-time high or a 12-year high, that's a little bit tough to go out and tell people, oh yeah, buy $35 silver, you'll be fine. I'm not going to be that irresponsible. I'm not going to tell people ignore the price, just go buy everything. There are still bargains on the table on a relative basis in the gold and silver space. The mining stocks have been underperforming the metals for years now, and that is starting to turn around. They are definitely showing life. So no, the stocks are not dead. That's a good thing. But they're not, many of them are not at all-time highs or 12-year highs. Some of them are at 52-week highs, but some are not. You have to be choosy. I wouldn't buy an index. I wouldn't buy a junior miners ETF or something like that. But selectively, there are opportunities out there. That's what I do. I'm a due diligence guy. So of course I'm going to say that. Maybe I'm talking my book, but that's what I think. I think that selectively, if I had money to deploy and I was late to this market, I'd probably wait for the next dip on bullion. But on the stocks, there are, I think, great buys out there today.
While industrial demand for silver is at an all-time high, the investment landscape for silver tells another compelling story. Exchange-traded funds, ETFs for silver, which saw record outflows last year, has started to see renewed interest as the economic landscape shifts. Traditionally, these ETFs give investors a way to gain exposure to silver without holding the physical metal, but outflows have occurred due to tightening monetary policy and rising yields. Yet, even with the outflows, physical investment in silver has remained historically elevated, especially across North America. Lobo Tiggre points out that recent shifts in economic sentiment could drive investors back to silver in droves. With inflation fears and potential interest rate cuts on the horizon, precious metals like silver are increasingly seen as a safe haven against fiat currency instability. This revival of silver's appeal, both as a commodity and a store of value, could add new layers of demand beyond industrial use, setting up the metal for a resurgence in price. Could this dual demand, industrial and investment, be the tipping point for silver's next big move?
I'm not a technical analyst. I'm a fundamentalist. And on a fundamental basis, I look at the world and I look what's happening, and it makes me just very, very bullish on gold. If we play with the charts a little bit, if you connect the previous all-time highs on the charts, 1980 and 2011, we've already broken north of where that line would be where we are now. So you could say it's overbought on that basis, peaking, connecting peak to peak. But connecting peaks that are 50 years apart, I'm not sure how serious a quantitative analysis that is, call it technical or not. Another fun stat is if you look at the percentage gains from last high, last peak to current peak, it would take like $3,800 gold to get to, too high compared to that rise if it were to repeat. But why should it repeat? In the 1970s, we came off a gold dollar peg. There was no gold price. There was no exchange ratio because the dollar was defined as a certain amount of gold. And, that clearly suppressed the market, and there was a coiled spring action afterwards. That's not the case in the market now. So I don't think that's reasonable, but it's kind of fun to look at, what happened last time? Well, the new all-time high before was twice as much as the previous one. It's kind of fun. If you look at, stochastics and RSI numbers and things like that, then sure, gold looks overbought. But looking overbought doesn't tell you when it should roll over. So this is a pure crystal ball statement. I don't know what's going to happen. We are in uncharted waters, but I'm not nervous about gold now. I'm just, everything I see on the table, all the reasons to like gold are there. It's even getting to become a bit of a crowded trade. Like the mainstream is catching on. Financial people who couldn't seem to spell gold, it's a four-letter word, but anyway, even these people on Bloomberg and Yahoo Finance and so on, they're getting on the gold bandwagon. Yes, that as a contrarian makes me a bit nervous, but not at these levels. This is not a prediction. It's not a forecast. It's just my sense is that when we get over 3,000, that's when things start getting, frosty. That's my worry level. That's not I'm going to sell everything. I'm not worried about gold now, but once it gets over 3,000, then I'll start worrying more about.
Silver's role goes beyond industrial demand. It's deeply rooted in history as a monetary metal, valued alongside gold for its function as a store of wealth, especially during times of economic uncertainty. Unlike other metals, silver has often mirrored the movements of gold, but with even sharper price increases during bull markets. This relationship is reflected in the current silver-to-gold price ratio, which sits at an unusually high 87:1, meaning it takes 8 to 7 ounces of silver to buy a single ounce of gold. Historically, this ratio has hovered between 40:1 and 50:1, with drops to even lower levels during strong silver markets. Tiggre believes this high silver-to-gold ratio signals that silver is significantly undervalued relative to gold. With growing inflationary pressures and a potential shift in Federal Reserve policy, many analysts predict a gold bull run, which would likely drive silver prices up as well. The potential for this ratio to correct sharply suggests that silver could see dramatic gains, presenting a unique window of opportunity for investors looking to capture silver's full potential as a safe haven asset. Could this imbalance in the silver-to-gold ratio be the hidden sign that silver is set for a major rally?
I'm a spider wolf at the center of a huge web. I have a team now, by the way. This started out as literally like a mom and pop shop with me and my wife at the time. But now I have a whole team of very smart people who are out there and they have their own networks. I have my own network in the industry from being in this industry for a few decades. But now I have this team that has their own growing network. And so I keep saying I'm not a technician, but I do look at the charts, right? I do look at what seems to have momentum. Mike Oliver's analysis, the momentum structural analysis, that's interesting to me. That seems better than a lot of other TA I've come across. But I also, the vibe, if you will, the constant news flow. I'm always absorbing news, even from, let's say outlets that I disagree with, because it's important not to be in your echo chamber. It's important to not just listen with people who agree with you. And it's telling when the people that you disagree with start saying things that make sense to you, or they're catching on to things you've been saying for a while. So it's a huge input. I mean, I'm constantly absorbing data. I'm kind of bummed because actually I've trained my guys so well that I can send them out to kick the rocks, and that's my favorite part is to go on the field trips and go underground and look at the sparklies in the the vein in the wall of the tunnel. But now I have guys who are very good at doing that for me. So more and more, I'm the center of this web, and I just get my spidey sense, if you will. I'm sure that's not a very satisfying answer. Ask me again after New Orleans, or if you'll be at New Orleans, ask me, and then we'll see if I can give you a better clue for how I do it.
Beyond supply and demand, broader geopolitical and economic factors are adding fuel to silver's potential ascent. Geopolitical tensions, such as ongoing conflicts in the Middle East and Russia's war in Ukraine, have made precious metals an appealing safe haven investment. Silver, like gold, benefits from this heightened uncertainty as investors look to hedge against volatile markets and escalating global risks. At the same time, the U.S. dollar has shown signs of softening due to recent economic data, making dollar-denominated commodities like silver more attractive to international buyers. Tiggre points out that a weakened dollar could amplify silver's price growth, especially as global central banks contemplate shifts in monetary policy. In uncertain times, assets like silver, with its dual role as an industrial and monetary metal, often experience increased demand. With these geopolitical shifts and potentially weaker dollar, could silver be positioned to benefit from a new wave of global investors seeking stability in precious metals?
Ask me what's my top pick for next year, because the last two worked out pretty well. I'm still working on that. I traditionally announced that at the New Orleans Investment Conference. But so, yeah, actually, I think uranium is pretty exciting. The latest is that the AI craze has adopted uranium as the no longer unloved stepchild. To have major tech darlings start contracting for nuclear power is a sea change. It's really momentous. And and the cherry on top of the cake is for Microsoft, that little known small nano cap, right, to contract with the owners of 3 Mile Island to bring that plant back online. This is huge. I mean, this is the source of the first big nuclear scare, even though nobody was hurt by the accident. Decades later, they've still defined anybody that was hurt by any radiation there. This is really huge. But the interesting thing is that hasn't had an impact on the spot uranium price at all. The stocks have gone nuts on this. There are stocks that were literally at 52-week lows last month that are now at or near 52-week highs, some all-time highs, without spot really having moved much. And long-term contract, of course, is more important, but that hasn't really, done a hockey stick or anything. It's really this AI buzz, I think, that's happening here. So what I'm saying is, this is very bullish for uranium. I'm extremely bullish going forward, but I'm wary of buying any of the stocks that have just done this. Do not chase stocks. So, if you're looking for me to pound the buy button, that's just not my style. Anything that's just gone like this, it just makes sense to wait for the next pullback. And by the way, if something has not moved, if all the uranium stocks except for that one stock that you've had your eye on has moved, that's a red flag. Like, what's wrong with this story? Why isn't it moving? That is an important question to be asking yourself. So yeah, I love uranium. I'm looking to add more exposure to my portfolio this week, but I'm not willing to compromise on the value proposition and what makes for a great speculation.
Pulling all these factors together, from record industrial demand and constrained supply to renewed interest as a safe haven asset, Lobo Tiggre foresees a scenario where silver's price could hit levels not seen in decades. This perfect storm of demand growth, Supply challenges and economic uncertainty has created an environment primed for a breakout. If silver starts gaining momentum, the price could not only close the gap with gold but also surpass previous highs, potentially entering a new bull market in the coming months. For investors, this could mean a rare opportunity to capitalize on silver's unique position within both industrial markets and as a hedge against financial instability. But with prices expected to rise fast, timing is key. As Tiggre advises, the dynamics aligning now make this a pivotal moment for silver, one that could define its market for years to come. Could silver's breakout be just around the corner? For those watching closely, this might be the moment to act. And remember, while silver presents promising potential, this is not financial advice. Always conduct your own research or consult with an advisor before making investment decisions. And if you found this breakdown valuable, subscribe for more insights on market trends and investment opportunities in precious metals.